I'm Vidya, moderator for the conference call. Welcome to Titagarh Rail Systems Limited Q4 FY2023 earnings conference call. We have with us today Mr. Umesh Chowdhury, Vice Chairman and Managing Director, Mr. Pritish Chowdhury, Director Marketing and Business Development, Mr. Anil Agarwal, Director Finance, CFO and CBRO, Mr. Saurav Singhania, Joint CFO and Group Finance Controller. As a reminder, all participants will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal the operator by pressing star and 0 on your touchtone telephone. Please note that this conference is being recorded. I would now like to hand over the floor to Mr. Mohit Kumar. Thank you, and over to you, sir.
Thank you, Vidya. On behalf of ICICI Securities, I would like to welcome you all for the Q4 FY23 and FY2023 earnings call for Titagarh Wagons Limited. Without much delay, I would now like to hand over the call to the management for the opening remarks, which will be followed by Q&A. Thank you, and over to you, sir.
Thank you very much. Very good afternoon to everybody, and once again, our own welcome, heartiest welcome to the Q4 and FY23 earnings conference call. As always, it's a great pleasure interacting with all of you. So just to give you a brief snapshot of the quarter gone by and the year gone by, and then, of course, very happy to take questions and answer them to the best possible extent. I think FY23 has been a significant year for in the history of our company. It's the beginning of the second 25 years of the company. The first, we completed 25 years in July 22, and it's been a significant way to kind of celebrate the quarter anniversary or the silver anniversary, because the company has moved from being just a wagon manufacturer to being a rail systems manufacturer, and that is significant from the change of the name also that has been implemented. So Titagarh Wagons now is called Titagarh Rail Systems, and that is reflective of the strategy that we would follow for the company in the future. We have also decided in the last quarter to segmentize the company into two business segments: the passenger rail systems business and the freight rail systems business. We have decided to merge the smaller businesses like the shipbuilding, etc., into the freight, because they are quite insignificant in terms of the overall size and the potential that we have now. That doesn't mean that we are foregoing those business opportunities, but definitely we are focusing on the existing opportunities that we have and keeping them in a slow burner, so that we can raise the flame there once we have been able to stabilize our core businesses, which is the freight rail systems and the passenger rail systems. The other significant developments in the company have been that we have kind of gone through a transformational journey in terms of the size of business that we have. You'll be happy to know that when we declared our results for FY22, we were with an order book of just about 1,600 crores, which along with our share of the consortium, orders that we have won in a consortium with BHEL and Ramakrishna Forging, our business goes up to almost order book goes up to almost 27,000 plus crores. So that's a quantum jump that we have been able to make during the year. In terms of performance also, we have continuously ramped up the performance quarter after quarter, reaching to 970 odd crores in the last quarter, and a total year revenue of 2,781 crores, which of course, the quarter and the year are the best ever in the history of the company. We believe going forward, the passenger rail system, which was just about 500 crores out of this 2,700 crores, has a long headroom available. We are currently operating at about 5-6 coaches per month. We have delivered 17 trains by March 23, and we would be ramping it up in the beginning to 20 cars per month, and then our capacity planned for the passenger coaches over the next 2 to 3 years is to go up to 70 coaches, 75 coaches per month. That's about 750-800 coaches plus in a year. In terms of the freight wagons, we are now around the run rate of 700 wagons, between 650-700, and we intend within this financial year to take it up to 1,000 wagons a year. The other very significant developments that have taken place during the year is, of course, our entry into the Vande Bharat train segment, where we won the contract from the Indian Railways for manufacturing 80 Vande Bharat trains in consortium with BHEL. As everybody knows, BHEL is a leader in electrical and propulsion, and that is what their scope in the consortium would be. And our scope would be to manufacture the trains. The prototype train will be made in the next 24 months, and thereafter, in about 4.5 years, the balance trains will be delivered, which is followed by a 35-year maintenance contract. Although the pricing has been a challenge because of competitive pressures, but we had factored in some part of it, and we believe that we will still be able to maintain the overall average blended EBITDA margins that we are doing now, which is about 8 to 10% in this contract, in the supply portion also. The services portion may be, the AMC portion may be a little better, but even in the supply, we should be able to achieve the 8 to 10% EBITDA margin. The other significant contract that the company has won is for manufacturing of wheels. And as is well known to most of you, and I think this has been one of the questions that has been asked in most of the investor calls, is how do you manage your supply of wheel sets, because that's been always in short supply. So I think a country like India, which has achieved many scientific feats, has still been dependent on foreign countries like China, Ukraine, etc. for availability of wheels. And kudos to the government of India and to the Railway Ministry for coming up with this very forward-looking concept of having a 20-year offtake agreement for buying 80,000 wheels per annum, which has enabled us to come in partnership with Ramakrishna Forging, which is undoubtedly a market leader in the forging business, and they have a wealth of domain expertise in terms of the forging process. Combined with our domain expertise in the railway, it becomes a very strong win-win association between the two companies. And we would be setting up together a plant to produce almost 200,000 wheels per annum. This would probably, I'm not sure exactly, but probably be one of the largest, if not the largest, wheel manufacturing plant outside China, forged wheel manufacturing plants outside China. So out of that 200,000, 80,000 wheels are assured for the next 20 years by the Indian Railways, and the rest will be used for our own wagons, for exports, for Vande Bharat, etc. So these are a few very important developments that have happened in the course of the last year. Another important, very significant and important development that has happened is in the erstwhile subsidiary that we had in Italy, that is Titagarh, wherein investment was infused by new investors, including the government of Italy, in September 2022, as a result of which Titagarh got converted from a subsidiary to an associate company. In terms of the operations of the associate company, the headwinds have been very strong in Europe, as most of you know. To start with was the COVID crisis, then was the inflation, Ukraine war-related inflationary crisis, and so on and so forth. However, having said that, the company has been is in the process of getting some very significant orders, and with the induction of the government of Italy as an equity partner, we do believe that the company has a strong prospect. The turnaround of the company has been delayed, which we were expecting to happen last year, FY23. We've not been able to turn positive in FY23, but we do estimate, based on the current order books, to be able to break even, at least on the EBITDA positive level, in FY24. We've been able to install a new management, which post the induction of the government of Italy as a shareholder, the board had to be reconstituted. The management has been installed with their consent, and we believe that the company is now on its way to recovery. So as far as the future outlook for India is concerned, the outlook on the back of the very strong government policies for Atmanirbhar Bharat, for Make in India, and the infrastructure. And I was hearing a interview of the Honorable Railway Minister a few days ago, where he was explaining the economics of investment in the railway infrastructure and the payback to the economy. So this is the first time that it's a music to ears that at such senior levels, such detailed and careful analysis of the return on investment in such infrastructure, particularly in respect to the railways, is being done. And that makes us even more confident that this story of the railways turning around and companies like us being able to ride that wave effectively is something that is likely to continue. So with these opening remarks, I'd hand over the call to Mr. Anil Agarwal and Mr. Saurabh Singhania to maybe walk you through some of the highlights of the financials, and then most happy to take any questions that may be. Thank you.
So good afternoon, everyone. This is Saurabh Singhania. So just few key numbers that I wanted to highlight in terms of the performance of the quarter. So in terms of the revenue, we had 974 crores during the current quarter, as against 422 crores in the corresponding quarter in March 2022, which is 131% increase. EBITDA has gone up by 114% as compared to March 22, and profit before tax by 173%. In terms of the overall revenue from year-on-year basis, this is 86% increase as compared to last year, 57% in EBITDA, and 85% in profit before tax. Some key ratios, if you see, in terms of return on capital employed, we were at 6.5% in FY19, which is in our presentation, page number 13, and now we have gone up to 26% in FY23. The return on equity has gone up from 5.2% in FY19 to 16.3% in FY23. In terms of net working capital days, we were at peak in FY21 at 80 days, which has now gone down to 60 days as on FY23. So in terms of the overall segmental performance, if you see, in the current year, we were at, from the freight rolling stock segment, the total revenue was at 2,250 crores, and the revenue from the passenger division has been at 528 crores. The margin from the freight rolling stock segment was at 10.47%, and the margin from the passenger rolling stock was at 4.16%. So with this, I would open up the questions from the participants in the call. Thank you.
Thank you, Saurabh.
Ladies and gentlemen, we will now begin the question and answer session. If you have any question, please press star and one on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and one again. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. The first question comes from Kaushik Mohan from Ashika Stock Broking. Please go ahead.
Hi, sir. Congratulations for great set of numbers. Sir, I have a couple of questions. Can you just give some light on Vande Bharat order? You have 80 trains order. What is the total value of this order and how much is your share? How much is your share? And in your share, how much is for construction and how much is for maintenance?
Thank you very much, Mr. Mohan. So for the Vande Bharat contract, there are two portions to the contract, the supply portion and the maintenance. The contract value is about 9,600 crores and plus PVC, which will accumulate over the period of time. And the maintenance is about 1.4, 1.5 times of that. So the total contract value, including maintenance, is about 24,000 crores. Plus the PVC, as I said. Our share on the overall basis is about 51-52%. And BHEL is the rest.
48% is 52 and 48% is BHEL, sir?
Between 51 and 52%. So it's around 51-52% is for us and balance is for BHEL. This is applicable both for the supply as well as the service.
Got it, sir. And my second question is on the this RK Forging part. Sir, with RK Forging, what is your share between both of us and what is the total order value? And how many years will this go for?
So the initial contract value which we have received is for 15,60,000 wheels, which has to be supplied over 20 years. The value of the contract is close to 13,000 crores. And participation of both the companies is almost equal.
Sir, is this inflation adjusted or is the number has been exactly calculated current price?
No, this is not inflation adjusted. This is plus PVC.
Okay. Sir, and
exact quantity is 15,40,000, yeah?
15,40,000, I'm sorry, not 15,60. 15,40,000 wheels, and the total exact value is
Closer to 30.
closing to approximately 13,000.
Got it. Sir, there is one recent bidding which happened for 50,000 wagons. When can we expect the results for this?
No, there is no bidding that has happened till now. It was in the media that there is a tender likely to come out, but the tender has not yet come out.
Got it. Thanks, sir, and congratulations for the numbers.
Thank you very much, sir.
Thank you, sir. The next question comes from Sunil G, an individual investor. Please go ahead.
Yeah. First of all, my first question is regarding this the decrease in the borrowing, which if I consider this current and non-current borrowing, so it's about approximately 600 crore rupees, which is fantastic. But there is an increase of 200 crore rupees in the contract borrowing. In the contract purchase. What does it mean? Does it also carry some interest, or is it purely like vendor cater?
Sorry, sir, are you talking about the contract liabilities on the standalone financial statement?
Yes. Consolidated, yes.
Yeah, so these contract liabilities are the advance from customers that has been received against various contracts. So this has been disclosed separately in line with the requirements of the Schedule 6.
So basically, if you can use the term as advance from received from customer, that will be much better, because it's too confusing and too misleading word. This is contract liabilities. It can contract can include so many things. Contract can include about vendors, about containers, so many things it can include. It can include. So better to everybody write advance receipt from customers only.
We take your suggestion, sir. Very valuable. We will examine this according to the accounting standards, and I've requested my team to examine. I think it's a very valuable suggestion.
Yeah. And number two, means I have seen all your press release. There is also some sort of incompleteness and a misleading portion is there, because you are writing, okay, 80 Vande Bharat 10 we have received order in consortium with BHEL. But there is no mentioning that what is your share of the JV or the consortium in that particular press release. So we as an investor, just like we just keep thinking, okay, maybe it's 90%, maybe it's 10%, maybe 20%, maybe 50%. So today you only clarified. So going forward, whenever any press release are given, kindly mention, like any other company mention, to give the complete information. Otherwise, it may also tend to amount to this, like you can say, violation of this required order, for example.
Again, thank you for your suggestion, but to the best of our knowledge, the press releases that have been issued by us, and we cannot talk about press coverages, but press releases, we always give all the necessary facts that are to be given. If there are some that you have come across which do not give the necessary details, we would request you to share this with our investor team, and we shall certainly look into it. But as a company, we are very conscious about press releases. Of course, we cannot control all press coverages because
no, sir. Sorry, sir. I'm not talking about press release. I'm talking about the corporate announcement which you are given to the stock exchange. We read only that one. Like we don't rely on this media or the paper. So whatever corporate announcement you have given in the form of press release to stock exchange, there only we have seen that nowhere you have mentioned or your team has mentioned regarding that what is the share of Titagarh Wagon or Titagarh Rail System in the particular JV or the consortium. So going forward, kindly mention this so that it can complete.
Thank you very much. We will definitely check this up, and if there is inadequacy of information, we shall definitely make sure that it is corrected.
Thank you. So nice of you, sir. So nice of you. Thank you.
Thank you.
Thank you, sir. The next question comes from Bala Subramanian from Arihant Capital. Please go ahead.
Good evening, sir. Congratulations for good set of numbers. My first question is, what would be the status for trial in propulsion systems for railways? And after propulsion systems, it's a kind of indigenizations. So what kind of margin improvement we may expect? Because right now in the metro, in the car side, around 20 to 30% of value comes from propulsion systems only. So after this indigenizations, what kind of margin improvement we may expect?
Thank you, sir. In terms of the process of approval of the propulsion system that is underway, some of the components we have already supplied and they are under the trial period. There is a very detailed step-by-step approval process for the propulsion system, which is actually quite time-taking. We are pursuing that, and over this year we should be able to receive some of the approvals and start bulk supplies. Some of the approvals will get spilled over to the next year. So overall, I would say we are by and large as per our plan on the propulsion system. And in terms of your second part of your question, that about margin improvements once we have our own propulsion system, definitely it is going to impact the margins favorably once we start making our own indigenous propulsion system. But in order to reach that stage where we will be fully independent and we'll be able to do our own propulsion systems entirely by ourselves, it is going to be a process of at least 2 to 3 years. So thereafter, there is definitely going to be a quantum jump in the overall margins of the PRS, that is the passenger rail system business. Having said that, I would also like to clarify that the passenger rail systems, even without the propulsion, is a business where we are expecting to get the same 8 to 10% EBITDA margins. The current low level of EBITDA is on account of the low top line. And our business, the top line is what drives the bottom line. So since the business is at a nascent stage, till the business comes to a certain base level, the EBITDA margins are lower, but you would see that it has improved over the quarters. And going forward, once we have been able to reach a certain base level, we would be able to get to the 8-10% EBITDA margin on the PRS also.
Okay, got it, sir. And sir, my second question on the traction motor side, what would be the volume on that monthly run rate, and what kind of target we have going forward?
So the capacity that we have, installed capacity is between 150 to 200 traction motors per year. That's 1800 to 2400 traction motors per year. But as I mentioned a little while ago, the entire process of approval is a time-taking one. We have already supplied traction motors. Some of them have already undergone trial. The trials have been successful, and it is a process which is ongoing, and we will continue to travel this journey.
Okay, so we are manufacturing around 50 to 60 motors per month, or like what would be the numbers?
No, now we are not. As I mentioned that we have only made the trial production. The trials have to go on, and there's a process. I mean, I will not be able to elaborate the entire process because it's the entire specifications of the railways. But to be able to get to the rated capacity of 150 to 200 traction motors a month is going to be a 2.5 year journey.
Okay, got it, sir. Sir, on the metro side, is there any big pipeline? And what would be the status on Surat and Ahmedabad metros? If you could throw some lights on future opportunities, that would be really helpful.
The metro business is a very attractive business. There are many metros that are coming up and that have been announced to come up. I would not be able to speak about specific opportunities, as we can only speak about them if and when we are successful in winning a bid. But all I can say is that, being the latest entrant in this field and competing with large companies, we have been able to establish ourselves in a very significant manner as the only Indian fully Atmanirbhar metro coach manufacturer. And using this advantage of being established as a good manufacturer of metro coaches, we will definitely be a significant player in this segment in years to come.
Thank you so much, sir. I'll come back in queue.
Thank you, sir. The next question comes from Vinay Chowdhury, an individual investor. Please go ahead.
Hello. Thank you for the opportunity and congrats on the great numbers. So on the wagons, how much would be the private sector wagons which had been produced in, say, FY23, and what are the planned production for the coming FY24?
Thank you, sir. As a strategy, we do not give the breakup between the private sector and the RSP wagons, but we do not announce those numbers. All I can say is that we are a leader in both the segments. We have order books which are probably equal to the largest or even the largest in the private sector wagon market also. And of course, we are by far the leaders in the railway wagon market. So in both the segments, we are quite actively present and are playing a very important, significant role.
Sure. And what would be the manufacturing? When can we expect the coaches manufactured for CRRC start?
The coaches are for Bangalore Metro on behalf of CRRC, and the production is likely to start in the Q3 of the current financial year.
Okay. And if I got the information right, the current capacity for metro coaches is around 1.5 to 2 lakhs.
I did not get you. I'm sorry.
So can you throw some light on the current capacity for the metro coaches? With the commencement of the stainless steel coaches set to begin production.
Okay. So for the metros, we will have a capacity of about 30-35 coaches per month, and then we would have similar capacity for the Vande Bharat. So overall, we are planning to build a capacity of about 70 cars per month.
Okay. Thank you very much.
Thank you, sir. The next question comes from Premal Shah, an individual investor. Please go ahead.
Yeah, hi, good afternoon, sir. Thank you for the opportunity. What was the wagon production for this current quarter? Total wagon production? Hello, I'm audible?
Yeah, you're very much audible. Good afternoon, sir. So, we have been able to get to approximately an average run rate of around 8,000 wagons. That's about 2,000 wagons in a quarter. But we would not be able to disclose the exact numbers as we not put that in our presentation, and we do not generally disclose the exact numbers. But we are now we have been able to achieve close to 2,000 wagons per quarter, and our target is in the current financial year to grow it further to reach close to 3,000 wagons per quarter.
Okay, thank you. And so in this quarter's results, the freight rail system shows a top line of about 808 crores, and you've already merged the shipping business into that. So could we get a basic idea about what is the freight rail top line and a shipping top line, because both are included, so we don't have an idea on that.
So it is primarily the freight rail, shipping being not a very significant part. That is why the segments have been merged. So to subdivide the merged segments at this point may not be possible or appropriate. But in the overall size of the company and the overall scheme of things, it would be extremely small. The shipbuilding would be extremely small at this point of time. As I mentioned in my opening comments, that is true for this at this point of time. And by no means we are planning to kind of downplay the shipbuilding for the long term. We believe that it does offer a good prospect. But for being able to concentrate both our capital allocation and management resource and time allocation, this reorganization has been considered appropriate and implemented.
Okay. And this Pune Metro, what percentage of the total contract is still pending to be executed, and by when will it be complete?
As I mentioned, about 50% of the contract has been completed till the last financial year. The balance will be completed within the current year.
Okay. Thank you. That's it from my side. Thank you.
Thank you, sir.
Thank you. The next question comes from Ankur Agarwal from RC Wealth Solutions Private Limited. Please go ahead.
तो पहले तो बहुत बहुत बधाई इतने अच्छे नंबर देने के लिए मैनेजमेंट की मेहनत और एम्प्लॉयज की मेहनत की वजह से। ये सर पैसेंजर रेल डिवीजन में क्या रेवेन्यू विजिबिलिटी आप समझते हैं अगले 2-3 साल में?
जी बहुत बहुत धन्यवाद। जहाँ तक पैसेंजर रेल बिजनेस का सवाल है, जैसा कि हमने कहा कि हमारी जो कैपेसिटी हम बिल्ड करने जा रहे हैं वो लगभग 700 से 800 कोचेस सालाना बनाने की हमारी कैपेसिटी रहेगी। और अगर हम लगभग एक कोच के और ये मैं सिर्फ कैपेसिटी के अनुसार बता रहा हूँ, अगर एक कोच की हम सेलिंग प्राइस कंसिडर करें तो करीब लगभग 9 से 10 करोड़ की सेलिंग प्राइस होती है। वंदे भारत में क्योंकि कंसोर्शियम है तो हमारी सेलिंग प्राइस थोड़ी कम हो जाएगी, बट एवरेज में अगर हम देखें तो ये एक अपॉर्चुनिटी, बहुत बड़ी अपॉर्चुनिटी है। और अकेली पैसेंजर रोलिंग स्टॉक और पैसेंजर रेल सिस्टम की जो अपॉर्चुनिटी है हमारे आज के पूरे कंपनी के साइज से बहुत बड़ी अपॉर्चुनिटी है। जो मेट्रोज की कैपेसिटी हम बिल्ड कर रहे हैं वो करीब 30 गाड़ियों की कर रहे हैं, और वंदे भारत की जो कर रहे हैं वो भी 30-35 गाड़ियों की कर रहे हैं महीने की।
ये जो मार्च क्वार्टर में है कितना पैसेंजर कोचेस हमने डिलीवर करा है?
अभी तो इट इज अ वेरी नेसेंट स्टेज। अभी हम वो 5-6 कोचेस तक ही पहुंच पाए हैं, बट अब हम उसको रैंप अप कर रहे हैं और जल्दी हम उसे 12-15 कोच तक ले जाएंगे और उसके बाद बढ़ा के 20 तक ले जाएंगे। ये मैं मेट्रो की बात कर रहा हूँ, और मेट्रो में हमारी फाइनल जो कैपेसिटी टारगेट है वो 30 कोच की है
पर मंथ।
जी 30 कोच पर मंथ की है। और वंदे भारत की जो लाइन है वो अगले 2 सालों में हमारी पूरी चालू हो जाएगी, जिसमें इनिशियली जो प्रोडक्शन है वो कम होगा, लेकिन जो कॉन्ट्रैक्चुअल डिलीवरीज है उसके अनुसार हमें 30-35 कोच महीने की बनानी पड़ेगी प्रोडक्शन के चालू होने के 2 साल के अंदर।
ये इटली का जो हमारा एसोसिएट हो गया है, उसकी ऑर्डर बुक पोजीशन क्या है सर?
इटली में जो लास्ट हमने अनाउंस किया था उस समय करीब आधे 500,000 450 to 500 million euro की ऑर्डर बुक थी, और वहाँ पे लेकिन कई ऑर्डर पाइपलाइन में भी उन्होंने बिड किए हैं, और वो अप्रोप्रिएट समय पे अकॉर्डिंग टू द डिस्क्लोजर नॉर्म्स हम जरूर डिस्क्लोज करेंगे।
ओके, थैंक यू सर, दैट्स ऑल फ्रॉम मी।
थैंक यू।
Thank you, sir. The next question comes from Karthikeyan from Siyash Advisors. Please go ahead.
Sir, good afternoon.
Good afternoon, sir.
Yeah, thank you. So couple of things, sir, on these 2 contracts, one in consortium with RK Forging and the other with BHEL. Given the long tenures of these contracts, and specifically on the RK project, where you are also creating extra capacity, couple of things. Can you tell us how protected are you in terms of downsides on the profitability side in these contracts? And B, given that you are creating 60% of extra capacity, spare capacity on the wheel set side, how soon do you believe you'll be able to absorb this entire capacity, sir?
Thank you very much. In terms of the downside protection, you see there are 2 ways of downside protection. One is the price protection for the contract on account of inflationary tendencies and trends. So all the contracts, the large contracts that we have got, whether it is Vande Bharat or the wheels, are both with price variation, adequate price variation clause, which kind of protects the companies, whether it's our consortium with BHEL or our consortium with Ramakrishna Forging, from the inflationary trend. In terms of the...
I'm very sorry to be interrupting, but when you say inflation, would that be only on the input side, or would that include fuel and other components as well, sir?
It is a very comprehensive price variation formula. I mean, of course, I would not be able to go into each element of that, but when the price variation formulas are worked out, they are worked out on the basis of the actual cost of production. So, suffice to say that based on the experience of the company over the last 25 years, which is a very long period of time to be able to judge the efficacy of such price variation clauses, barring a couple of quarters here or there, where price movements could be very steep and sudden, the price variation clause does compensate for the inflationary cost pressures.
Right.
In terms of utilization of the capacity is concerned, if any venture is set up where 40% capacity is underwritten by a single customer for a long period of 20 years, that in itself gives you a very large, huge head start. So that is what we are looking at. We are looking at the glass half full and not the glass half empty. The 60% capacity that we are building up is something which will be not a big challenge to kind of absorb or to be able to sell, as we ourselves as a wagon manufacturer are always in shortage of wheel sets. Then after that we would also have the Vande Bharat, and then the maintenance of the Vande Bharat. So there's 35 years of maintenance of the Vande Bharat, which would also require wheel sets. And then there is the export market. Wheels are, with the China Plus One strategy which the world is following, today most of the wheels are being produced in China. So we do believe that there is a very good export potential, and we would be focusing on export markets as well for the wheels that we would produce.
Right. One clarification, sir. Would there be a meaningful import content in terms of raw materials? Is it still available locally for the wheel sets, or would you have specific grade requirements which you have to import at this point in time?
Steel is available locally, but I will not be able to give details about the kind of import versus domestic content. These tenders are under Make in India clause of the government, which means substantial local content is a must. But having said that, these are operational decisions and we are talking about a contract which lasts for 20 years.
Sure.
So, obviously there are the strategies cannot be kind of decided ab initio or upfront.
Right. But there is no restriction, there is no constraint in terms of local availability. My question, I get that you retain the option, of course.
That's right.
And one last question, if I may, sir. Don't mind my belaboring the point. But with just the 40% utilization, 77,000 per annum effectively the wheel sets, would you at least break even at an EBITDA level with just this number, that is to say?
It would be going into too much of financial detail. We will definitely disclose because this is a consortium of two listed companies. Whatever is possible to be disclosed. But once again, I would say that as investors, you would have seen many companies, and as industrialists, whatever little we have seen, if a business is started, a greenfield project is started, wherein 40% of the capacity is underwritten for the next 20 years by a single customer, then the head start, it's like starting at a 50-meter or a 40-meter kind of handicap advantage in a 100-meter race.
Of course. No, I appreciate the advantage, of course, sir. Just clarifying whether there is a longer gestation than what is available immediately. That is the only point behind the question. But thanks very much for indulging me, and very best wishes, sir.
Thank you.
Thank you, sir. We have a follow-up question from Kaushik Mohan from Ashika Stock Broking. Please go ahead.
Hi, sir. This is a question on, I just wanted to understand on your current Pune orders. So how many total, what is the contract value for Pune, and how many, you told 50% is being delivered. That means another 50%, how long you have the time?
So the total contract for Pune was 34 trains. The value of the contract was about 1,100 crores. 50% has been executed. The balance will be over within this financial year.
Sir, for one train, how many coaches that comes out to be?
3. So 34 trains is 3 coaches each, 102 coaches.
102 coaches. So that means that half of that is 51 you have been already supplied, and 51 is still more pending.
That's right.
Okay. Sir, in this duration of 1 year or 2 years, over the 2 years or 1 year?
So this will be completed within this financial year.
You will complete this in this financial year. Okay. Sir, how about the Bangalore order?
As I mentioned a little while ago, we will start production in Q3 of the current financial year, and that would take about 6 quarters or 7 quarters as per the schedule.
Okay. Sir, what is the margins only in the metro segment? Only for the private metro segment?
Sorry, I didn't get your question.
What is the EBITDA margins in Pune metro segment?
We would not be able to disclose contract by contract margins for competitive reasons, but segment margins have already been disclosed in the results that have been published.
Okay. So because in this financial report which I have gone through, I'm just seeing that margin is 4.1%. Is my reading right, or is there any mistake on this?
No, there is no mistake in the reading, sir.
The reading is correct then, what I'm talking.
Yeah. As I explained a little while ago, that we have not been able to attain till now the base level of capacity utilization, and therefore the fixed costs of the business gets amortized over a smaller volume, which results in lesser margin. Apart from that, there are some learning curve costs that are incurred in a new business. But going forward, we expect that once things are more stable over the next maybe 3-4 quarters, 5 quarters at the most, we would be able to also target 8 to 10%, which is the projected or forecasted EBITDA margin in the PRS also.
Got it. So the last and final question, what can be the capex for the next 3-4 years plan?
We had already announced the capex that we are likely to incur including the ones that we have done in the last 2-3 years, is about 1,000 crores. So what we have done in the last 2-3 years is around 250-300 crores. The rest would be spent over the next 4 years time, which would also include our equity portion to the wheel project.
Got it, sir. Sir, another question is on the wagons part, on the freight wagons. So this year, how many wagons have you produced? If any near number works out for me.
It's already disclosed
in the investor presentation, is there, sir?
It's already disclosed in the investor presentation. The dispatch for the current year is 5,298 wagons.
Okay. Sure, thanks. I just got that.
Thank you. Thank you.
Thank you, sir. The next question comes from Abdul Qadir Raja from Ratnabali Investments. Please go ahead.
Good evening, sir, and thank you for giving me the opportunity, and congratulations on such a great set of numbers. So I just wanted to understand the demand for the private sector for the wagons. And if you could just throw us a ballpark number like of how much wagons you would have delivered during the previous quarter.
So we already mentioned that the delivery on quarter by quarter basis is something that we are not disclosing, but approximately we have been able to achieve about 2,000 run rate of 2,000 wagons, close to 2,000 wagons per quarter. I didn't get your first question, the first part of your question, if you could repeat it.
Yeah, so just wanted to understand the sales number which we have thrown the freight rail segment. So just wanted to understand how has the private demand shaped up in the last quarter.
The private demand is shaped up well in the last year, I would say. We are not giving the breakup, but I did mention during the call that in terms of our company, we are a leading player, one of the leading players in the private rail wagon business as well. We would have one of the highest order books, and in both the private sector and in the Indian Railway business. So the private wagon business is also a very buoyant business. But when we look at the wagon business per se, we have to see the overall demand, because the demand of the railways is there as a set number, and the purchasing is done either via the railways' own funds or under the PPP mode, which is done by the railways. The private sector bidders.
Okay, got it, sir. That's it from my side. Thank you so much, sir.
Thank you, sir. The next question comes from Akash Bohra from Dalal and Broacha Stock Broking. Please go ahead.
Thank you for the opportunity, and congrats on the strong set of numbers. So my question is more from the point of view of regarding the capex that we are going to do. Is it going to be from our internal accruals, or are we going to take more debt? And what is the broader strategy on debt as to how are we planning to, how much debt are we planning to keep in our books, and how much are we planning to repay in the short and medium term?
Sir, our strategy as far as debt is concerned is quite evident from our actions over the last years. While on one side we have incurred capex and enhanced capacities, if you compare on a standalone basis, which is excluding the erstwhile subsidiary also, over the last 5 years we have reduced our debt quite significantly. So we are conservative, very conservative as far as our debt policies are concerned. On the funding of the capex, we are generating cash. We have a good cash flow. Having said that, we also have a large growth trajectory. As you are aware, and you can see from the numbers, 2018, which is 5-6 years ago, we were at 300 crore top line, and now we are at a 970 crore quarterly line, so which on an annualized basis is 10-12 times of that. So obviously the cash requirement goes up. So as far as the funding of the capex, judicious mix will be worked out. It is still work in progress. We would be using part of it through our internal accruals, maybe part of it through debt, etc. So this is something which we do not see or envisage this as a challenge, but we would be working on this and making sure that it is done in the best interest and sustainability of the growth trajectory that we have embarked upon.
Okay, sir. So basically, we are not planning to raise any proceeds from equity, right? Issuing equity mode.
There is nothing that has been planned so far, but I would not again like to speculate on any future issues. But no, we have not yet planned any equity raising so far.
Okay, sir. Okay, and if you could give any guidance for FY24 and FY25 on the revenue and EBITDA levels.
We do not give guidance in terms of the business for the future, but what we have always maintained is that our business is top line leading the bottom line, the kind of a business. In terms of the EBITDA, we continue to maintain that we would be able to do. Our business is a business which gives about 8 to 10% of EBITDA. Some quarters can be slightly better, some quarters can be slightly worse. Some contracts can be slightly better, some contracts can be slightly worse. But on a blended basis, when we do our bidding, when we do our strategies, we ensure that we are at about 8 to 10% EBITDA. We have already disclosed to you the order book that we have and the ramp up that we have been able to achieve over the last 6-8 quarters, where we have been very consistent in our delivery vis-a-vis whatever we have promised. So we hope and we are sure we'll be able to maintain that kind of a performance.
Okay, sir. And just last question from my side. So this was regarding the large orders that we have received. So, namely the wagons order from Indian Railways, the Vande Bharat order, the metro order. So these three, what is the broad execution timeline and what is the broad revenue booking, like when it will start reflecting in our books? So what's the broad timeline for these two things, for these orders?
So the execution timelines of different orders are different. There's not a standard execution timeline. The wagon order is already under production and revenue has been booked over the last 11-12 months, I would say. For the Vande Bharat, the first train will be supplied in 2 years from now. And thereafter the train supply would happen in about 4.5 years. The revenue recognition would start when we start building the train in the POCM method. And metro, as I mentioned a little while ago, the Pune metro we have already executed 50%. The balance will be executed during this financial year.
Sir, so for Vande Bharat, when we are recording on a POCM basis, will the revenue booking start from FY24 and FY25 itself? Because we would have already started building the train, right? Or no?
So I will not be able to comment upon that. That is an accounting treatment which has to be dependent on the physical progress of the work. So as it is the percentage of completion, so as the project starts getting completed, the revenue recognition would happen accordingly. But of course, if we have to deliver, which we will deliver the train in 24 months, the production activities will have to be started much before.
And the wagons will complete by? The wagons order, 24,000 order, will complete in that by?
This is scheduled to be completed by August 25.
Okay, sir. Thank you, sir.
Thank you.
Thank you, sir. The next question comes from Akshay Kothari from Envision. Please go ahead.
Yeah, thanks for the opportunity. Sir, am I audible?
Yes, absolutely, sir.
Yeah. Just one clarification. The 9,600 and the remaining maintenance, so the work share is equal for both BHEL and us?
I've already clarified a little while ago that it's about 51-52% for us and the balance for BHEL.
Yeah, but also on the maintenance front?
Yeah, I did, yes. It's both supply and maintenance. Both are approximately the same percentages.
Okay. Now, sir, on the Vande Bharat trains, is there any stipulation of certain level of indigenization which needs to be there, which is there embedded in the contract?
I'm sorry, I didn't get your question.
So, you did mention that rail wheel sets would also be a supplement to the 35 years of maintenance which we would do for Vande Bharat. I'm just asking whether there would be any stipulation of, Atmanirbharta or indigenization content which is there in existing Vande Bharat contract?
Yeah, absolutely. All these contracts are under the Make in India clause and Atmanirbhar Bharat clause.
Yeah, so there is a stipulation of around 80% local procurement or something like that, right?
Different tenders have different stipulation of local content, so I will not be able to comment on individual contract, but yes, they do have the appropriate local content which is stipulated by law.
Okay. So lastly, what risks do you perceive in these contracts? Because I've of lately seen some of the companies, whenever there is this jointly and severally liable clauses because the other party does not perform and the whole project goes further. So what are the risks which you perceive in these contracts when we are working with the counterparty?
There are risks in every contract, in every sphere of business. What we absolutely do, and the risks exist for both sides. There is a perceived risk and there is an actual risk. So both parties work together to mitigate those risks, and that is exactly what we are doing also in both the cases, in our both the partnerships that we have bid in. We don't see a huge risk as such, which is unmanageable, because both the cases we have very strong partners, and both the partners bring in immense value on the table in terms of their know-how, expertise and management bandwidth. So we really do not see this as a risk, but we see this as an opportunity.
That's great, sir. So lastly, do we have capability to build aluminum coaches as well?
Pune Metro, we are the first aluminium coach manufacturer in the country. Pune
On the
Metro
Vande
is
Bharat side as well?
If we can make one, we can make any one, but Vande Bharat current project is on stainless steel.
Yeah, understood. But I think there are talks of getting into aluminum coaches for Vande Bharat as well.
We will cross the bridge when we come to it. Whenever there is an opportunity, we will definitely evaluate the opportunity on its merits.
Thanks a lot and all the best, sir. Thanks.
Thank you, sir.
Thank you, sir. The next question comes from Sonia Varnikar from Dalal and Broacha. Please go ahead.
Hello, sir. Thank you for the opportunity. I have two questions on Vande Bharat. Earlier, you had mentioned that margins for Vande Bharat order would be higher in maintenance versus manufacturing. So, in initial years, when majority business would come from manufacturing part of the Vande Bharat, it will impact blended margins, right?
No, it will not impact blended margins, ma'am, because as I mentioned, that our business, a sustainable level of EBITDA margins is 8 to 10%, and that is what we are expecting to receive from the supply of Vande Bharat as well.
Okay. And so regarding propulsion system, it will be sourced from whom for Vande Bharat?
Our partner BHEL is responsible for the propulsion supplies.
Okay. So, sir, in terms of quality or technology, how is it placed against the competitors?
The very fact that the railways have technically evaluated, qualified and awarded the contract to us is testimony enough that the partners, both us and BHEL, are fully competent to produce a quality train as per the required standards. Both BHEL and us have qualified on the basis of our credentials, which is past performances. So, in a nutshell, both of us have already kind of been in the respective businesses that we are in and have been able to supply the right quality product in the right manner. That's what has led us to be able to be the successful bidder for this tender.
Okay. So, last question, if I can ask. Recently, there was an announcement that Railways would be procuring 238 Vande Bharat rakes for replacing Mumbai local Vande Bharat metro rakes. So, will Titagarh bid for this order?
We've also read the announcement, ma'am. As I mentioned, we evaluate each opportunity on its own merits. We are a significant and leading player in the business, both in the Vande Bharat now and in the metro segment. So definitely when there is an opportunity, we definitely would evaluate that. To give a definitive answer of a yes or a no at this point of time would be premature, because we've also read this from media reports. The tender is not been floated as yet.
Okay. And sir, in terms of capacity for passenger coaches, like if such orders come, then how well we are placed to increase capacity?
I already mentioned we are increasing capacity significantly, and our targeted capacity is to get to about 70 coaches per month in the next, say, 3 years or so.
Okay. Thank you, sir. That's it from my side.
Thank you. That will be the last question for the day. Now, I hand over the floor to the management team for the closing comments.
Thank you very much, and thank you to all of you for the very insightful questions and suggestions. We have taken note, my team here has taken note of each one of them. Thank you for the support and the confidence that has been bestowed upon us in the past, and we do look forward to be able to live up to those expectations in times to come. As I mentioned that, India is going through a transformative journey under the current regime in terms of the railways, the Atmanirbhar Bharat Abhiyan, the infrastructure spend, the Make in India program. And I have always believed that the Make in India program and the Atmanirbhar Bharat is probably the most significant development in independent India in terms of supporting and encouraging local industry. So we have just been able to ensure that we are able to ride this wave and be a part of this journey that the government, the Honorable Prime Minister, has been able to kind of define for the country. So we believe that this growth in the railway space, in the infrastructure space is here to stay, and it shall be continuously our endeavor to be able to upgrade ourselves on an ongoing basis to be a significant contributor to this process of, I would say, reconstructing Indian infrastructure. So thank you very much, and wish you all a very, very good evening.
Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doorsabha's conference call service. You may disconnect your lines now. Thank you and have a pleasant evening.